Hi, I'd like to take a few minutes and give you a walkthrough on how to read your income statement and your balance sheet from TA Connections. You log in to TA Connections, and then on the left-hand side you scroll down to your financials, and what you see is a summary of your income statement, and you see the total sections for each category. But most people like to see a little more detail. If you click on the current month, or any month you choose, but I'm going to click on the current, you then can see the details that make up the totals from the first page. You have your year-to-date information, your budget information, your comparison from last year, and you also have your current period-to-date. Your first section is your income from operations. In this section you have your different flavors of income, your premiums, your endorsements, in this case electronic fees, conveyancing. Many offices have closing fee income. It all depends on your particular office and the state you're in. Here's your deductions from income section. You have your underwriting fees, your certification, production and income, which is also known as search expenses. These are your items that are your cost of doing business. It brings you down to your gross profit. In this instance, you have $811,187 is your gross profit. This is the amount of money you have to pay your operating expenses, and hopefully the goal is to have money left over for a profit. Now you can scroll down to your operating expenses, your salaries and your bonus expenses. Fringe benefits. This is a summary category of your company paid share of medical, your life insurance, your short-term disability, and your long-term disability. Then it's the company paid taxes for your payroll. Advertising and promotion, you could have signage, your holiday parties, your giveaways, all of these items, and many of them that you order right off of TA Connections would be here in advertising and promotion. Auto expenses, if you submit reimbursement for mileage, that's where you would see this. The administrative expense is the fee that you pay to Title Alliances for all of the services that we provide. Dues and subscriptions, if you have any subscriptions to services, you pay your ALTA dues. All of these are in those categories. Equipment costs, would be your equipment maintenance, your rentals, or any small purchases. And this would also include your RamQuest fees, your copier fees, all of those things go in this category. Insurance expense, this is for your office insurance, for your E&O. License and fees are the fees that are paid to keep your office licensed and to keep up on your individual licenses. Internet fees would be your website fees. Loss expense, these are the actual expenses that we've had to record for losses for your office. And then title loss recovery income, this shows how much has been collected this year in recoveries, which is why it's a negative, and these run against each other, one after another, so you can see what was charged and what was collected. And that would be what you could have collected, or you could have had Gary collect from media for you. Scanning and microfilming, it's an old category. We don't really have the need for it much now, because we use RamQuest and everything should be put in electronically and saved. Miscellaneous expense would be small items, such things as your water coolers, postage, this would be your regular postage, and or your Federal Express. Printing and supplies, any of your office supplies, any special printing requirements that you have. Premises costs can be a combination of items. For the most part, it's your rent expense. Some offices have to pay some of the building expenses. That would also be in premises. Telephone would be your office phones and or your cell phones. Depreciation, that would be the cost of any of your items that might be capitalized, your furniture, your computers. All of those items, we know we're going to get more than a year's worth of use out of them. So accounting rules allow us to depreciate them over time. And then you would see what your net income is. Then you have other revenue. You have miscellaneous income. Sometimes you might have some additional taxes. And then you come up to show what is your net income or loss. This would be your profit margin. And then you have applications, settlements, and closing counts. The applications are exactly that. It's whatever the number of applications you took in for the month. Your settlement counts are how many settlements you actually show. And these numbers, we can pull these right from RamQuest. Closings received. That is how many did we actually receive in accounting to process for you. That's why there's a differential between settlement counts and closings received. So if you're doing any type of budgeting and you want to do any type of comparisons, you always want to use your closings received number to compare to things like your gross premium to get your averages. You always want to use closings received, and that way it matches your financial statement. We also have available for you a balance sheet. I'm going to click on the balance sheet. It'll open in Excel. Here's your balance sheet. The balance sheet is the statement that most people are not as interested in, but it is provided for you. A balance sheet is a moment in time. It's a picture of the culmination of that date. So on 10/31, this is the total cash you had. Your prepaid expenses. We tried to spread expenses for you so that you're not hit. Your insurance policy for your office, your E&O, your surety, all of those, you could be paying them, and it could be $7,000 or $10,000 for the year. We don't want to hit your office with that whole charge in 1 month, so we spread it over time. So it sits here in prepaid insurance and gets expensed over time. Some offices, you have to pay for your tax certs in advance, so we set you up with an amount that sits on your balance sheet to help you with RamQuest. Your normal prepaid expenses could be a lot of other things. Your annual licensing fees for RamQuest. Once again, we have to pay them annually, but we don't want to hit you all at once. If you have any large expenses for your offices, any large purchases, or events that you're going to that are expensive, we once again try to spread those for you to make your financial statement a little smoother. Communication equipment, if you have any large purchases of like phone equipment. Computers obviously are your laptops or desktops if anyone has them, and furniture would be any cubicles that have to be built or desks that have to be purchased. Accumulated depreciation is the corresponding number to your depreciation expense. Depreciation expense is shown over the year, but once again, anytime we set up an asset for you, it's over time. So this would be a couple of years worth of depreciation. And you have your total of your fixed assets. Then we have our liabilities and capital section. Your accounts payable could be anything at that moment in time that is still due and set up for you. This is the amount that would be due to Title Alliance for any expenses we paid in advance for you. This is an amount that's due to your underwriter that we pay. We monthly set up accruals for both your bonuses and or to smooth payroll. We do have, in the year, we normally have 2 months where we have 3 pays. And by setting it up, those months don't get charged with 3 pays. Everybody shares in the 3 pays. In your capital section, the total capital for your office in this instance is $320,270. That's basically your net worth for your office. Here you have your net income or loss. That's a year-to-date number. Our balance sheets are fairly simple. We don't have a lot of items on them. They're not very complicated accounting balance sheets. If you have any questions or if you ever want to know what an item is, you can call me, you can call Tom, or you can call Karen, and we'll be happy to look it up. Or if you have any questions on your income statements, you can contact any one of us too.